All right, let's talk about a huge shift that's happening in trading right now. Seriously, this could completely change the game for regular investors by 2026. And the driving force behind it all, you guessed it, artificial intelligence. Let's dive in. You know that feeling, right? That constant knot in your stomach when you're trying to predict which way a stock is going to go? You hit buy, and it tanks. You decide to sell, and suddenly it shoots to the moon. It's a frustrating guessing game, and honestly, most of us end up on the losing side. Well, get ready, because that whole way of thinking is on its way out. A totally new approach is taking over, one that has nothing to do with needing a crystal ball to see the future. So, what is this next evolution all about? We're talking about a move that takes us way beyond just trying to guess if a stock is going up or down. This right here really gets to the heart of it. On the left, you've got the old way, basically betting on a price moving from point A to point B. But on the right, that's the new way. Instead of guessing the direction, you're profiting from the movement itself, from the simple fact that markets are always bouncing around. This is what we call harvesting movement, or harvesting volatility. So let's get into it. What exactly is volatility harvesting? Well, think of it like this. It's a strategy that's designed to profit from what you might call market fear. And this is the key. A volatility harvesting AI is basically an automated piece of software. Its entire job isn't to guess where a stock is headed. Nope. Its only job is to find the gap between how much the market thinks a stock is going to swing and how much it actually does, and then profit from that difference. This slide makes it super clear. The AI is basically playing detective. It's looking for that sweet spot between two things. On one side, you have implied volatility. That's the market's fear, or its best guess about future chaos. On the other side, you have realized volatility, which is what actually ends up happening. That's the reality. The AI lives to find and exploit the gap between that fear and reality. So why are people getting so excited about this? Well, the goals are pretty compelling. First, the idea is to generate more consistent income by basically selling that fear. Second, and this is a huge one for us humans, it aims to take our own emotional decisions and biases right out of the picture. And of course, it's about protecting your capital and making money off all that little market noise that's just impossible for a person to track. Okay, so let's pop the hood and see how this thing actually works. It might sound super complicated, but when you break it down, the process is actually pretty logical. Let's take a peek inside the algorithm's brain. It really boils down to a 4-step cycle that just runs over and over. Step 1, it's scanning, constantly monitoring thousands of options contracts at once. Then it's comparing, looking for that juicy gap between market fear and reality. When it finds one, that kicks off step 3. It picks a strategy, buying or selling options to capture that gap. And finally, and this is probably the most important part, it's always hedging, constantly rebalancing the trade so it stays neutral, meaning it doesn't really care if the market goes up or down. Now, to make all those decisions, the AI uses what traders call the Greeks. I know, it sounds a little intimidating, but it's just a way to measure and manage different kinds of risk. You see here, delta is all about price risk. What happens if the stock moves? Theta is about time risk, because options lose value every single day. And vega, that's your volatility risk. The AI is just a master at juggling all of these variables to keep the trades on track. So let's zoom out for a second, because when thousands or even millions of traders start using tools like this, it doesn't just change their own accounts, it actually starts to change the entire market. So what are the new rules of this game? We're talking about a massive ripple effect here. It starts with individual traders switching from guessing direction to selling volatility. All of that selling pressure actually starts to calm the market down a bit. So then brokerages have to compete by offering better tools and lower fees. But here's the twist. All that competition makes the profit margins, that volatility premium, get smaller. And that just creates demand for even smarter AI to find an edge. It's this wild, self-reinforcing cycle. Okay, but what does this all mean for you? Well, 3 huge things. First, you get time freedom. The AI is watching the markets around the clock, so you don't have to. Second, complex strategies that used to be only for the pros. Now you can execute them with basically one click. And third, and this is the biggest mindset shift, your focus changes completely. You stop worrying about price and start focusing on managing risk. And that really brings us to the single biggest change of all. Your role as a trader is fundamentally transformed. You're not a stock picker anymore. You're the manager of the machine. But hold on. before anyone gets too excited and just plugs in an algorithm, we have to talk about the risks. This isn't some magic money button, and it is absolutely crucial to understand the dangers lurking beneath the surface. And I think our source material puts it perfectly. This is a quote worth remembering. These algorithms are not free money machines. They're incredibly powerful tools, for sure, but they are not foolproof, not by a long shot. So, what are we talking about here? Well, first, there's tail risk. That's a huge, out-of-nowhere, black swan event that can cause massive losses before the AI can react. Then there's model failure. If the market's behavior changes in a way the AI has never seen, its old rulebook might become worthless. You also have simple technical glitches. Your internet going out at the wrong second could be devastating. And finally, maybe the biggest one is complexity overload. Just using a powerful tool without truly understanding the risks it's taking for you is a recipe for disaster. So, when you weigh all the incredible potential against these very real risks we've just covered, you're left with one big question to ask yourself. Is this kind of AI the future of your portfolio? Because at the end of the day, that's what it all comes down to. The game really is changing. The challenge isn't about predicting the future anymore. The new challenge and the new opportunity is figuring out how to manage the machine.